Hello and welcome to our investment committee's updated market outlook as we go into a new year post-election. I'm David Adams.
I'm Miles Zuger.
And I'm Carson Odom.
So COVID-19 is still very much with us, and it's looking like Biden is going to be our 46th president, and the House of Representatives is going to stay with a Democrat majority, and we're still waiting to see the Georgia Senate runoffs to see if Republicans are going to maintain their majority in the Senate. And as most of you know by now, we've talked a lot about this in past videos, the market typically likes a balanced Congress.
And by balanced Congress, purely meaning no matter who's president, simply one party is in control of the Senate and the other party is in control of the House of Representatives.
That's right. And really at this point, the question we're getting from most of our friends, clients, family members, what have you, is what's next? With COVID, a desire to be free from the lockdowns, a vaccine that's being mass produced currently, historically low interest rates, and an economy that appears to be coming back. What is 2021 going to bring?
And so as an investment committee, internally we've been meeting frequently and discussing these matters to help make sure that our portfolios are positioned well moving forward.
Right, and Miles, we were talking recently, in fact a little bit earlier, about the changes that we made recently. What were some of those?
Yeah, some of the more recent changes that we made ahead of the election were rebalancing IRAs, swapping out a couple funds that had some poor performance relative to their benchmark, and replacing them with some funds that moving forward we feel are going to be some better performers.
Yeah, our mindset has been to slightly de-risk, knowing that COVID cases were on the rise. Government lockdowns were being threatened again, and really this potential steep Biden tax plan that we were hearing a lot about and making headlines.
Yeah, and so looking forward to 2021, a couple of the top items that we're looking at, potentially moving slightly more aggressive in equities, assuming, as we mentioned earlier, that Congress would stay balanced, and then also how we can generate some return relative to the risk in fixed income, despite the historically low interest rates that we currently have.
Yeah, and really, as always, with these changes and others, we really try to remain very tax conscious. With that being said, Carson, you're the CPA in the room. I'm also a CPA, but Carson, I'm going to give you this one. It's your time to shine. Any tax planning ideas just going into the year end and to 2021?
Definitely, and we've all heard about Biden's aggressive tax plans that he wants to do, but of course this is all talk. Every president has a huge long list of things they want to do, but usually it ends up just being a couple things that they actually get done, and it's got a long way to go before it actually becomes active.
And the bigger question we always ask clients is, should you really be making big decisions based upon a plan that may come to light?
That's right. And around here, I'm sure you've heard us say it, don't let the tax tail wag the investment dog. So of course,
cute.
We don't
that's my line.
That's for Jolene. Yeah.
That's for Jolene.
We don't necessarily want to make big investment decisions just to get a tax benefit. But some of the lowest hanging fruit usually could be a Roth conversion. So taking any sort of pre-tax money you have in an IRA and converting it to after-tax money and letting it grow tax deferred potentially for the rest of your life. But there's always a kicker to that, and it's specific to every client in their specific situation.
And Carson, I think it's important to note too on the Roth conversion, it truly makes sense if you have cash outside of the IRA that you're converting that you can pay those taxes with.
That's right, exactly. So there's a Roth conversion, and also a big picture item is legacy planning. So making sure that as you review your wealth and how it's going to be passed down to future generations, or potentially wealth that you're going to potentially inherit, is considering the tax effects of that, because it's also threatened that the lifetime gift exclusion could be lowered from $11 million or so per individual down to $3 million. So that's just something else to be conscious of. Oh,
and also speaking of taxes, capital gains, the potential for those to go up in 2021, that's a big one.
Yeah. For most, you're paying about 15% on long-term capital gains. If you're in the top tax bracket, that's around 20%. And currently, we could see capital gains tax rates go up to the max ordinary income tax rate. So that would be a huge hit, and definitely just a conversation you want to have with us or your current advisor to know, is it right for you?
And at the end of the day, that is what you have us for, to help us walk through your plan and your situation that's specific for you and make sure it's positioned the best that it can be. Yes.
Yeah, thanks guys. I'll close by just adding that we'll be doing our annual rebalancing for for our client portfolios, likely in January. Again, we're watching a lot of the political landscape as far as timing on that. But one thing I've learned over my 20 years of doing this is that things usually never turn out as extreme as we hear about in the media or that we fear, right? And so that's something to keep in mind. And the best advice, and I want to reiterate this, is to have as much cash on the sidelines as possible. So typically we talk about that 3 to 6 month emergency fund. If COVID's taught us anything, it's to maybe look at extending that to more like 6 to 12 months. So just something to keep in mind. And then most importantly, above everything else, would be to really focus on spending time with those you love, doing the things that you love, and to actually turn off the news and ignore the media, and again, focus on relationships. So with that being said, thank you for listening. Happy holidays.
Happy holidays.
Happy holidays.
See you soon.